The stock market is at an all-time high, a record. Unemployment is at its lowest level in 16 years. And because of our regulatory and other reforms, we have more people working in the United States today than ever before.
And that's what he campaigned on, right? Jobs, getting people back to work. I keep saying this is Econ 101. Less regulation, hopefully lower taxes, equals economic prosperity, growth. You've heard me say before, we're really in a challenging spot right now because this economy increasingly is looking like an hourglass, with the middle class really getting squeezed, and we're having less and less of the middle class. You get a lot on the bottom, you get a few on the top, but not enough in between. Well, how is the Fed contributing to this? I'll tell you, the Fed is contributing to the wealthy's ability to get even wealthier. Because if you have capital in an environment like we've been in of no economic growth for the last 8 years, you've done just fine. You've done absolutely fine because the Fed has helped you along with the equity market, pushing it higher bit by bit by bit. Fox News contributors Steve Cortes and Mary Anastasia O'Grady join me with more on this. And, you know, Steve, I keep saying we need to have fundamental change in the economic growth. And the only way you're going to get that is really by meaningful change out of Washington. We've started to see that in terms of rolling back regulations. Does this mean that we can get away from this sugar high influenced market? Thank you very much, Janet Yellen, and start getting towards a real positive economic picture?
Well, Trish, I sure hope so, but more than hope, I think so. And the reason I think that is there's some really strong evidence that that's starting to happen. Incomes, while they're not high enough, incomes are rising. Consumer confidence is soared. Small business surveys soaring. And I think this maybe is one of the most hopeful things. It was reported yesterday by the Department of Agriculture. Every month of Donald Trump's presidency, people have fallen off of food stamps. Now, there's still far too many people on food stamps. We're over 40 million. I think that's a crisis in our country. However, the good news is the trend is starting to go the right way.
You know, I'm glad you brought that up because you look at these programs like, for example, the SNAP program. And I've talked, Mary, about this hourglass economy. And I think what's so hard right now is if you're in the middle class, your kid doesn't get the scholarship, right, to go to college because maybe you don't qualify. And you don't qualify for the free health care and the free food. You're in a much more difficult situation because you don't get the benefit of being on the bottom and getting those handouts. Meanwhile, as we look at the Fed and we look at the markets, those who have capital have benefited in this environment, right? You just make an investment and you keep watching it go up. So what do we do? What can the Fed do, if anything, to address this problem of an hourglass economy with our middle class feeling all the pressure?
Well, I think the most encouraging news we're getting this week is the Fed is talking about working back towards a normal monetary paradigm. And, you know, this 8 years or so of buying, more than 8 years, 10 years of buying, making asset purchases to try to, you know, basically feed the housing market and having negative real interest rates has been very costly because business investment has not gone into the places where it would create jobs. And I think if the Fed starts, and it's going to be very slow, but if it starts to shrink that balance sheet, it's not going to basically sell off the balance sheet, but it's going to let things that mature roll off so that the balance sheet comes back to something.
You think that's a positive for your average consumer in the middle class?
That's absolutely positive because I strongly believe that this monetary policy has been contractionary. It's been contractionary because...
But why? It shouldn't have been, right, Mary? I mean, this was supposed to be the anti-contractionary policy. And by the way, it did help the stock market along the way.
Think about, well, of course it helped the stock market, but think about what happened to those reserves that the Fed created. They did not go into the system. They sat on the balance sheet as bank reserves because the banks were being paid a premium to just hold them there at the Fed. They weren't putting them to work. So that was contractionary.
Why would you, right? Why take the risk if you're not making any interest on it?
Yeah, and it was also consuming those assets that would otherwise be in the market. And, you know, it was very bad for savers. So I think that if we could get back to something more normal, where the Fed should not be in the business of buying mortgage-backed securities, it will really boost the confidence of the market and return us to a market in those assets.
I'm glad that you brought up savers. That's an important component of this as well, Steve, that Mary mentioned. I mean, you know, your person that is living off a set income, a fixed income, doesn't really have the ability to live off that income without going into their principal because, you know, the banks are paying nothing.
Absolutely. And you know what, too? It's punishing the wrong people. It's punishing people who are responsible. An example would be my 80-year-old mother can't earn any income off of her retirement savings, right? And what is she supposed to do? Go and buy the FANG stocks? I mean, at her age, you know, that's not a great option either. So you're so right. Savers have been punished. But and there's a lot of bad news, and central banks have failed miserably at creating real prosperity. They inflated asset prices, but not real growth. But that's the bad news. Here's the good news, is we have a new economic sheriff in town, Donald Trump. Deregulation has already happened. I believe tax cuts are coming. And then we're talking about real growth on Main Street.
Let's hope so. Thank you so much. Good to see you, Steve and Mary.